Welcome to the London Outlook for Thursday, the 7th of December 2023. Starting off with the economic calendar, there is no high impact news for the London session, and thus we'll touch on this high impact news that's to come in the New York session in the New York Outlook. Jumping straight into the charts, what you can see is on the 4 hour, in terms of market structure, nothing's really changed. We're still highly bullish in terms of market structure, but in terms of order flow, what you can see is we have had the change in character of the validating the pullback phase, and you can see in this oval I've essentially marked out the primary leg of the pullback phase. Since then, and coming into this morning, you can see we've pretty much pulled back quite a bit into this pro-trend OB, with the pro-trend extreme being quite nearby. In terms of daily direction bias, just quickly hopping onto the daily chart, you can see we've had 3 consecutive bearish candles, which then suggests that day 4 should be a bullish closing candle, and as a result of this we can only long for the day. However, the technical analysis does support both longs and shorts, given that the pullback phase is validated. But because of the probabilities suggested by a day 4 bearish candle being unlikely, and by unlikely I mean the chance of a fourth day bearish candle is about, I want to say, about 9 to 10%. Essentially, a fourth consecutive bearish candle only happens about once a month, and while we are in the beginning of December, it is possible that we'll have a bearish close. However, the higher probability scenario is that this today actually will close bullish, and for that fact we will only consider longs for the day from this pro-trend OB, and it actually lines up quite nicely because the tapping of this pro-trend 4H OB enables us to build the primary leg on the 30, 15 or 5 minute based on that order flow. Moving on to the 30 minute, what you can see is we've got this nice supply chain forming, and given the supply chain and the FUB, which is aligned to today's extreme but yesterday's, or rather previous day's high of the day, we have this POI to consider, and the FUB aligns there, so we can enter on the wick break of this level. However, like I said, we're only considering longs for today because of the daily candle bias, and as such this is invalid, but I'll keep it on just for marking it up for the purposes of my markups. I'll be back, I just need to take a call. Sorry about that. Just to continue where I've essentially left off, I just said that although we have reason for a high of the day to form during the London session, this would be invalid due to the daily candle bias. Thus, moving on to the 5 minute, I just want to move this over to the moving on to the 15 minute, what you can see is there is some change of characters happening right here. What I've marked out here is the 5 minute, but essentially we are building this this primary leg based on the pro-trend OB, and thus we'll be looking to long. As usual, our rules for previous session liquidity, especially Asia range, we'll wait for the Asia range to be broken on one side, and then we'll consider entries, and then if we don't get an entry in Frankfurt, we'll consider the Frankfurt range and then trade accordingly. But yeah, I think that's the conclusion. In summary, we're looking for longs for today. We're in a nice 4H OB, and in terms of targets, we'll use either ADR, which is our daily range, um, which is roughly about 90 to 100 pips at the moment, so somewhere around here. Or if you want to be conservative, we can just target one of these pullback phase OBs, maybe the previous high of the day, assuming that we are going long. And then for the New York session, we have that red folder news to consider, its impact on any open positions or new positions, but given the news impact or the type of news release, we're not too concerned about closing trades beforehand. But yeah, that's essentially the outlook for the morning, and we'll chat again for the New York outlook.